All right, welcome to another Learning About Loans. Today, Mr. Sean Kirksey, the big at Reverse Mortgages here, or the Reverse Mortgage Department, I should say.
Yeah.
So, Mr. Sean, tell me this. I know you and I've done it for a long time. We've had a few conversations about reverse mortgages. What is it, speaking to someone that might need a reverse mortgage? And let's speak to the kids today. So, we'll say
Okay.
someone like myself that, you know, that is getting up there in age. They may need some help. They may not need some help. Financially, I might need to start, helping them out a little bit each month. What people might notice or know is that reverse mortgages can be a wonderful vehicle to maybe prevent that. So give me some color and some background as far as reverse mortgages. In a scenario like that, what are some possible solutions we look at?
Absolutely. So, to your point, they may be getting right about to start helping out financially, or they may have been paying their parents' allowance for the last 5. The reverse mortgage is an opportunity for their parents to take a portion of the equity out of their home and liquidate that, use it to pay for the rest of their finances, whether that's to pay for medical care, to pay for home improvements, to pay to go on vacation. It doesn't matter. They could take it to Vegas and put it all on black. Like, we don't recommend that, but they can do whatever they want with the money. And this is, so when I'm an heir and this is my parents who are doing it, it's really because my very first loan was for my grandfather. So I understand the position a lot of these people are in. Uh, but the reality is, it's a really, really product. It's probably the safest mortgage product in the business. And it allows your parents who have worked for a really long time, done all the right things, exactly the right order for a really long period of time to be able to have this equity that now that can pay off for them and really free up money for them on a monthly basis.
So let's say what you just said. And that I didn't know that said about you. Your first loan being from your grandfather. It's incredible. So in this case,
Yeah,
I need to stop giving my parents allowance, right? So
right.
every I'm throwing, or maybe it's every quarter, I'm throwing something out to help with some cost. But they have lived in their home for a very, very long time. There is a lot of equity. A reverse mortgage, it, I know about early 2000s, we'll say. Maybe you agree or disagree. I've been doing this since 2003, basically. So I've been originating loans. In the first early years of my career, I feel like the reverse mortgage just had a black eye. And it was kind of like this. It just a lot of people got taken advantage of.
Absolutely.
And there's probably still some bad actors out there, right? And that's what we're trying to prevent today. But what are the advantages for like what are the different ways to do this? So I'm cutting a check to my parents every month, in their home. What are the options that the parents have? So we'll just call them mom and dad. What are
Yep.
the options that mom and dad have that can help everybody? Help me from having to pay money and help them just, be efficient. What are the options that a reverse mortgage offers them?
Yeah. Mom and dad have a lot of choices, right? Nowadays we've got our standard FHA version mortgage. That's the bread and butter mortgage. That's the everybody knows about the reverse mortgage. But then on top of that, we've got a second mortgage position if they don't want to pay off a low interest rate first, or we've got proprietary products that can go upwards around $4 million. So today there really is a everybody. And when we talk about the black eye, and I hear it all the time, we have to talk about the history of reverse mortgages to a degree. And prior to 1980, reverse mortgages were the Wild West. And so when somebody says, I heard these are bad and you can lose your home, they have incredibly long memory because they are talking about prior to 1980. In 1980, Ronald Reagan federalized reverse mortgages and put them under with a ton of different restrictions to it. They were still a little bit loose, right? So back when the Dodd Frank Act came out, they re-tightened up the restrictions around this to where now it really is the safest mortgage product somebody can get.
And Dodd Frank, just for those that don't know, was a result of the mortgage crisis. So 07, '08, mortgage crisis hit. Dodd Frank was instituted thereafter to put a lot of guardrails and protection around the industry as a whole, not just reverse mortgages, but mortgages as a
Absolutely.
whole for because we industry, global collapse, no big deal, right? So since then, again, a lot of stuff got cleaned up. This is better for mom and dad. So mom and dad in Texas, if I'm not mistaken, one needs to be 65 years old. Is that correct?
In Texas, they both need to be 62
Both
years
need to
old.
be 65. So in other states, what's the low limit? I know the answer. And
In other states, it could go down as low as 55 years old, and we don't always have to have the husband and wife both be of age, like one person. Texas has taken everything that FHA has done to protect our borrowers, and they've notched it up a little bit even more. That's
And that's what Texas
as
does.
Texas does. Right.
Yeah, in Texas, for those that don't know, we're a very strong homestead state. We have laws unlike any of the other 49 that are out there. So it's not surprising that they make it very restrictive. So members on the household, it sounds like, need to be 65 or older in Texas. Other states can be 55 and maybe only one.
Yeah. In
And then
Texas, it's 62, Mark.
62, 60. Hey, even better. I just gave you 3 years.
3 years sooner.
I just gave you
Absolutely.
3 years sooner, right?
Right.
62. So at 62, they can access the cash. And as far as like the types of the results, so they know they need cash, whether it's monthly or lump sum, pay off some debts, whatever it is, right? If they need, what are the options? Because I know there's a handful of ways to structure what this feels like for mom and dad when it's done. So what are the different ways of mom and dad when this is over? What can they have? They can have cash in their bank. They can have no mortgage payment. All different options of what that looks like.
Absolutely. So they can have cash in their bank. They can receive a monthly payment. They can say how much money they want, and we can calculate for them how long that money will last. They also have an option, we call it a 10-year loan, that says we tell them how much is available, and then that guarantees them for the rest of their life, even if they live to 105 years old, they'll still get that monthly amount. So there's what we call a term payment, a 10-year payment. There's cash out. There's a line of credit, right? And again, there's the second mortgage option. So the most important thing is our being able to really talk to that client, find out what's going to be the absolute best solution, and then show them all the options to help them decide what's the best one for them. Because no two of these things are the same. So we really want to make sure that we're addressing somebody's specific needs.
Yeah, and so some of the concerns I imagine I've heard them, and you can probably validate this, is the kids are like, well, man, that's my quote unquote my inheritance, and
Mhm.
that's I don't want to have mom and dad tap into their equity because when they're gone, I want that equity. Look, the reality is, if I'm cutting them a monthly allowance check, whether it's monthly, quarterly, who cares, right?
But
Because
you're digging into it either way, right?
either way, you're giving the money today for them to go do something, which I can't imagine. And some look, there are very many instances where that maybe needs to be the case, right? And we're not going to go one
Mhm.
off because maybe mom or dad can't, or just mentally they're not all there to help themselves. But the reality is, for those that can and will support themselves, I got to imagine this is a much better alternative to empower them and give them back some of their independence. But again, from bleeding as a kid, right? It's one of those things where I can stop the
Yeah,
bleeding. They can, like you said, cash out, no payment, actually get payments. Like every month they get an allowance, so to speak, from their equity. And I think that just gives them, again, it gives them the independence to do what they want because it is their money, right? And that's where
it
I always
absolutely
remind
is.
the kids their inheritance, like, hey man, you came into this world with zero, and in theory, your parents can leave you with zero because that's their money. They earned it. Now, again, that's me.
Absolutely.
That's not over
When we
there.
talk, when we talk about that inheritance, I can tell you it would be really, really difficult for somebody to burn through all of their equity with a reverse mortgage. It's really hard to do because we're going to start them out somewhere around 35 to 40% home value is what they're going to be able to access in money. Um, and if they never make a payment on it, if they never make an interest payment on it, which is 100% their option, if they never do, over time that balance is going to grow. But that means that the balance on 30% of the home value is growing. The home value itself is also growing over time. So it's really, really difficult to accrue so much interest that you outstrip all of the equity in your loan in the home. The good news is if you did by some, I mean, here's the
You live
scenario.
to be 150. You're the first person to
Yeah,
live to,
you live to 150 years
right?
old and your property value goes down in value because they built a liquor store and a vape shop across the street, right? Now all of a sudden you are in a negative equity upside down position. Okay. With reverse mortgage, put the keys in the mail and send them back to the bank if you inherit that home. You owe nothing. It is a non-recourse loan. You can never owe more money than what it's worth.
But and that's the key part. And I think the other thing is that 30 to 40%. So on a $400,000 home, the typical, the normal, there's no normal. I don't want to speak this. I will tell you, if somebody's like, oh, my parents have 20% equity, reverse mortgage is not going to work. Am I right
Not
by
going to
saying
work for them.
that? Right?
Absolutely.
Like
Yep.
what is the average, out of curiosity, just in general, what do you think the average loan to value is for a reverse mortgage loan?
Well, reverses are funny because the older somebody is when they apply, lower the interest rates are at the time they apply, the larger percentage of money they're going to qualify for. So, with when we talk about somebody who's getting 30% of their equity, that's probably a 62-year-old. When we're talking about
That's a
some,
spring chicken, right? That's a
right.
spring chicken in the reverse mortgage
Yeah.
world.
Yeah. If we're talking about somebody who's getting 50% of their equity, probably 80 years old.
Okay. So to the point, there's a lot of equity. And again, also goes back to what you said about the appreciation. So if somebody says, man, I got a $400,000 and they are able to tap and get equity of 30%, I don't
Hmm.
say only, but it's only 120 grand on a
Correct.
$400,000 asset. And if you just historically, and again, history doesn't predict the future, but it certainly rhymes, right? But all that to say, if it's at 3%, that's 12 grand a year in value, your home goes up. 100 becomes 412, which becomes 425, which becomes 430, whatever. And so over time, the appreciation still continues, which to your point, Sean, is why it's hard for them to catch up and use that much money along the way because the reverse mortgage started at only 30%. And again, the
Absolutely.
reason why, and you're thinking, well, why does somebody who's 90 get more money than when somebody who's 60 might need it long because they're going to live longer? And that's it, right? There's
Yeah.
actuarial tables come into all these things that say life
And
expectancy.
it's designed to not go upside down. So that those tables are in place there.
Yeah, so again, I think the biggest thing is if somebody's watching this and you're like, man, I'm helping mom and dad, or I want to stop, or mom and dad need the financial piece. And I think this goes back to anything in life, but especially with money, right? Whether it's financial advisors or mortgage consultants, insurance agents, find somebody who knows what they're doing, right? Of high character, like and trust, that's going to walk them
Yep.
through this and make sure they are getting the right structure. Because again, there are so many ways to do it. You can't say this is the way to do it. You got to talk to mom and
Uh,
what they need, what they want, what the whole estate plan may look like, how many kids are involved. Got to get their opinions, right? Because everybody's got one. So I think
Absolutely.
that is really what's crucial, and I think the team do so well, Sean. And that's where I'll raise my hand and say, yeah, reach out to us and let's at least see if this is a fit. But the reality is, I don't pretend to know everything because I got guys like my back pocket, right? To where it's like you and your team are the ones that are going to be handling this. So I just want to commend you for doing such a great job. And what
Thank
is
you.
one parting thought? So I'm the kid. I've watched it. What do you think? What do you think is the one thing that they're still thinking right now? Like, I don't know. Like, what's the one other big objection you get coming from somebody with mom and dad?
I don't know if you're thinking this, but I think this is something that a lot of people don't realize is if your parents have a reverse mortgage, when when they eventually either sell the or sorry, they either pass away or move out of the home, right? The heirs are going to have 1 year to decision that property, right? To deal with the
Wow.
equity, to pay that home off, to refinance it, to put it on the market, to sell it, whatever it may be. They're going to have up to a year to do that. And I kind of and say, if I were to pass away tomorrow, one of my daughters is going to have to make my mortgage payment in 2 days, and none of them can afford to make my mortgage payment. So right away, they're going to be pressed up to against the wall. They're going to be in the midst of grieving the loss of their father, and they're also going to have to deal with this asset in a very quick way. They're probably going to have to sell it for less than the home is worth because they need to get out of it because they can't afford the monthly payments. When there is a reverse mortgage in place, the heirs have up to a year to sell that property off or refinance it or do whatever they're going to do with it. And I think that in and of itself is a feature about reverse mortgages that most people don't understand,
I I
but
wouldn't have
it's
thought
an
of that. You're
absolute
absolutely right.
reality.
Like the mortgage company said, I'm gone because they had a good customer, me paying them every month. But the reality is they still need to want their money on a normal forward mortgage.
Absolutely.
Reverse, if mom and dad have been getting money every month, the mortgage company, it's the pressure's not there as far as the time bomb ticking. And you're right, because even if you say, oh, I got life insurance or they got assets, you still got to go through whether it's
Takes time.
you
Takes
still got
time.
to go through probate and all the other stuff to
Mhm.
get the access to said money. So
Absolutely.
I think that's one of the bigger features that probably needs to put on a flyer or
It
something
really
below
is.
with lights. Say, look at this, because that is so true. I've never thought of that. That's wild. Sean, this is why you're around, buddy. This is why you do what you do.
Therefore,
Well, buddy,
absolutely.
I appreciate you. And again, if you're watching, learning about loans, we appreciate the mortgage market team's here to help. Sean's here to help. We were here to take good care of it. But man, reverse mortgages, they rock. They used to not, or at least in my mind, right? Like I said, they had the black eye. Nowadays, they got some really cool things. So reach out to us if you have any questions, and thanks for watching.
Thanks.